Are we ready to go?
Yeah.
Have we been
ready?
Where have all the buyers gone?
I want a radio voice.
Radio voice.
Calling in now.
Calling it now.
I have to listen to this in headphones.
Poor guy. Do we ever land on a name of our podcast, Andy?
No.
Welcome back to podcasts that yet to be named. All right. Did you want to start? You had a question. Okay.
My question is this. Here's my question, because we started off, real serious.
80s
last
ballads.
Time. Don't go chasing
No, is that?
waterfalls. Real serious last time. So what I want to start the same way.
Yep.
Because you got me thinking. Because you're from my, generation. I was like a grunge guy growing up.
Sure.
What? Just right now.
Yep.
Top of your head. Mm-hmm. What's like a song from high school that pops in your head? And then, don't just tell me the song though. Give me a little tune.
You know what? I want to think about it because I remember the album cover, Bush.
Oh yes, yes.
But I can't think of this. I need help.
Glycerine. And the days go by.
Yep, that's.
I should have been easier on you.
You got a pretty good voice, Kevin.
Should I wanted to? What are we talking
Today, at our Pomerleau TMT meeting, by the way, I'm joined again with Kevin Yamaya at Bell Bank. Again, if you look back at some of the previous podcasts, pretty big deal. Number one lender in the state of Minnesota for Bell Bank in 2023.
Number one team.
Thanks for correcting me. But today, so I had a Pomerleau team meeting, and at the meeting, we invited somebody from Bell Bank into about kind of the Minnesota specialty programs and down payment assistance.
Yep.
Right? I, for one, am overwhelmed. We got a lot of good information from it. I heard one story that somebody actually from one of your offices got $117,000 in down payment assistance funds.
Yeah, so we had our affordable product market manager out. So she works with me, but she also works with all the loan officers at Bell. So she's got this information at her fingertips. Yeah, she just let me know. It was a surprise to me that a loan officer had a client layer, was it 4?
Three or four. I don't know.
4 DAPS, down payment assistance programs, bonds, money from different cities, counties. Maybe it's a first generation program.
Yep.
For a total of $117,000 to buy a home. So get $117,000 in assistance. That's not the norm, but can it be done? Absolutely.
So I think this is what was most eye-opening to me, and I like data and I like statistics, right? I kind of feed off of that, is that we have the biggest pool of buyers in all year buys in the third to fourth quarter. So I guess it would be somewhere in the middle there, right? So like last year, the Pomerleau team, 40% of all the people that bought a home with us closed after August 1st through December 31st.
It's crazy.
Right? And most of those, looking back, a lot of those were first-time home buyers.
That's part of the reason we wanted to talk about this now is kind of like you and I have 4 kids each. We've got families. It's hard for us to move during this time. But this is the time of the year, September, where we start to see this kind of first-time buyer come more into the fold. So it's a good program to talk about.
Well, there's not just one program.
No,
there's a lot of programs.
There's a ton of them.
Ton of programs out there. So why don't we just start with the first top of line here? What do most people? Let's just say, hey, I've got a medium credit score. Mm-hmm. I've been a renter. I want to buy a house.
Yep.
Okay. I got limited funds for my down payment. Right. Well, I'm going to save, or I have to save more money, or I don't feel like my credit's high enough.
Yep.
So what would you say are like the minimum standards that somebody would say, okay, I should be talking to a Kevin Yamaya at Bell Bank or somebody about, can I buy a home?
Yeah, so there's a lot of asterisks there, but I'm going to keep it simple. Some easy marks, and the product we talk about that's been around in Minnesota forever is MHFA, the Minnesota Housing Finance Agency.
I would say that we use that the most together.
We use that the most. We were just talking about in the meeting. It's, honestly, when we do loans together, do you see a difference in a normal loan that I'm doing for your client or a down payment assistance loan? Can you tell?
If I wouldn't had to write it on the purchase agreement, I wouldn't know the difference at all.
Right.
Nope. The time still closing in the same amount of days.
Yep.
I don't get bugged and with problems.
And I think that's important to know from the real estate side. But that's the one that we've been doing forever. And minimum there, 650 credit score, $1,000 of your own funds into the transaction. You can get $16,500 or $18,000 in assistance to be used to down payment, closing costs, prepaids, your insurance premium. Now it can either be paid back once you sell the home, or it can be paid, if you're at a higher income limit, it can be paid back monthly over the course of 10 years. But that's the most common one. We do it all the time.
So if I wanted to look at buying a home now without a down payment, there's lots of options that I could do.
Absolutely. Well, $1,000 minimum,
Yep.
but comparatively, very little down.
One of the asterisks, right? You have to have a credit score.
Yep.
You still have to be lendable, stuff like that.
Yeah.
So what I found was the neatest one, and they really were good at clarifying this, is first generation home buyers, right? So meaning if you have never owned a home, your parents have never owned a home, you can qualify.
Or your parents lost a home due to a foreclosure.
Or lost the home due to a foreclosure. Minnesota Housing first generation homebuyer loan programs. They have a big chunk of money set aside for this, and you can get up to $35,000.
Yep. Bell's done, I think she said in the meeting, 85 of them so far.
Okay.
The funds are still out there. $35,000. It is half of it. So it's $35,000, which that's more than what we just talked about.
A lot more.
MHFA.
But you can
Double.
Yeah.
And you can layer them together. So now we're talking some really big numbers. But this particular assistance program gives it it's forgiven after, now this is different. The first generation, it's forgiven, half of it's forgiven after 10 years, and then it's 100% forgiven if you're in the home for 20 years. So
if I buy a house, I take all $35,000. Now I don't have a calculator with me, but I have Mr. Calculator here, and I move and I want to sell in 9 years. Right? I have to pay back all $35,000.
Right.
But if I move in year 11,
yes, when your buyer comes to you, or your seller now comes to you and says, "Man, I want to sell," you're going to say, "No problem." You're going to wait a few months.
Yep.
So that you can get that $17,500 forgiven.
And if I wait 20 years, which most people don't stay in the home for 20 years,
No.
And especially your first home.
No.
But 11 years is very realistic.
I've been in mine that long.
Yeah.
Yep.
Yeah. And then you're only going to pay back $17,500.
Exactly.
That's pretty big deal. What are some other things from a banking standpoint and buying your first home should like the general public be aware of right now?
Well, I think just know that there are, if it's going to be hard to remember all these programs in depth, but just what I would say is know that there's a lot of things out there. And sometimes you don't get what you don't ask for. So ask, call around, see what's out there. You know, the person who layered in those 4 or 5 down payment assistance programs, they weren't just using Minnesota Housing or First Generation. They were using like a city bond that became available.
Or the whole list,
county bond.
Yeah, the whole list that she had pulled up. And I don't know if we can put that in the
Later
or something. But I mean, Eden Prairie had something, and Ramsey County had something, and Minneapolis had something. So we're talking about, I mean, the ability to get some significant income. And you know, there's things you have to be like, you have to qualify, right? You have to be at a certain median income sometimes for some of these programs. But it seemed to me that they were set up so high that most people will qualify for them.
Yeah, absolutely. I agree. Yeah, I mean, to look at it, it was a $10,000 Eden Prairie first-time homebuyer, a Roseville first-generation DPA loan for $25,000, City of Richfield DPA $20,000, Minneapolis Home Program $20,000, Community Keys $10,000, and Ramsey County Homebuyer Assistance up to $93,000.
So if you really wanted to, right? So I'm going to layer $35,000 on the first-generation homebuyer. $35,000. Then I'm gonna get Minnesota Housing. That's gonna be another $17,000, whatever it was, right?
Yep.
And then I'm gonna go to Ramsey County and get up to $97,000.
Crazy. Someone did it at Bell. We got it done.
I mean, that's just really cool.
It is cool. That's a great success story.
Okay. But there's the talk's all about rates though. Right? So I'm gonna wait because rates are too high.
Fair enough.
But when she showed the rates, I thought they were pretty good.
Yeah.
I mean, we're not talking about...
What did you see?
We're not going to be in 3s and 4s probably ever again.
Well, I think the public knows that by now, right? They're not expecting that anymore.
Yes, but let's take the down payment assistance out of the equation. And you've got a 800 credit score buyer. They're putting 20% down, right? Very small percentage of the population.
Yep.
They have a super low debt to income ratio, right? What rate they're going to pay a 1% origination fee. So what rate are they going to get today?
5.99.
Okay.
We just quoted.
We should quote that this is September 10th, 2024.
Let's get the exact time here.
At 11:19.
Right.
because that
will be
change tomorrow.
different by the time this podcast drops.
Yep.
But the only other thing I'll say, you said a small percentage of the population, but keep in mind too, 5% down, that's going to be pretty similar. So you don't necessarily have to have 20% down to get that rate.
Good call.
So you know.
Good call. Because that's probably more buyers are in that 10 to 5
Especially
to 10.
this time of year, maybe, would you say?
Yeah, than 10 to 20. I would say a lot more 5 or less percent down right now.
So we are seeing them fall. They've been coming down. The Fed meets next week, largely expected to cut. What I've read is that a 0.25% cut is baked in. It would be a large disappointment if they don't cut a 0.25%. So hopefully they do.
Yeah. If they don't cut a 0.25%, you and I are going to change this podcast to talking about bagels and donuts.
What about like singing about 90s?
Or singing
90s
about
grunge?
90s rock bands.
I was kind of thinking Nirvana next time potentially. I don't know.
Yeah, it smells like Teen Spirit.
That's pretty great.
That's pretty great.
Agreed.
Wow, what do we
Let's
got?
hope that doesn't happen. But
I agree. But, okay, so 599. Back to what I was talking about. And then we'll get into, because that's a great segue. We should talk about that. 599. And what I was seeing with the down payment assistance programs, getting all of these things, we're at 6.625 with the same, like, behind, like, scores and all that stuff.
Yes.
That's not like significantly different.
It's not.
And when you're looking at a monthly payment different even, that's not that much.
Maybe it depends on the loan amount, but maybe $100 a month, somewhere in there.
And I'm going to get like potentially tens of thousands of dollars to help me buy a house.
Exactly. Yep.
Yeah. All right, but let's jump back to the Fed.
Okay. Yep.
So right now, interest rates, 5.99. Let's just go back to that.
High fives, let's call it.
High fives, baked in with a 0.25%. So when they come out in September and say, "Yep, we're going to honor the 0.25% that we said we're going to do."
Yep.
What are rates going to do?
Great question, and unfortunately, this is going to go out there and be timestamped forever. So I better be right. My guess would be that if it's a 0.25%, we're not going to see much change because that's already baked in. And most clients I talk to, I shouldn't say most, a lot of them don't realize that.
Yep.
They think, oh, I hear the Fed's going to cut rates, therefore mortgage rates will drop by a 0.25% on September 19th. That's not the way it works. No. Wall Street's looking ahead. They've got this priced in. So a 0.25% is already baked in. Now, here's the thing. What if Powell says, we got to slam the brakes a little harder and does a 50 basis point cut? That would be interesting. I think rates could drop quite a bit if that were to happen. Yep. So, and let's go the other way. If he doesn't do it at all, again, Matt and I will become singers, but whatever.
Yeah, about that. But I do actually have a lot of conversations with buyers, and I get the question, like, maybe it's more of a statement. Matt, I'm going to wait till I hear what the Fed does in September.
Yeah.
I was like, oh, why are you waiting to hear? Like, well, it's because if they cut rates 0.5%, I'm going to get a better rate. I was like, yeah, but let's just say that happens. Are you going to find a house the same day, lock your interest rate the same day, and you're hoping that they cut more than what's already baked in? The general public doesn't realize that that's already baked into the current interest rate today.
Or let's say it does drop. Like about a month ago, the Nikkei sold off, and it was like, oh my gosh, recession, worldwide recession. We saw rates kind of plummet. Mm-hmm. If you got greedy there, then you waited. What happened right away is they retraced up. Yep. Sometimes after that big drop, there can be a knee-jerk reaction and it retraces. Yep. And then we've been slowly getting back to there since.
Well, we saw with that one, I don't know, it was 1 or 2 days in the stock market when something like the bad news comes out on unemployment and it just goes crazy. Plummets. The Dow, it's all over the news for 2 days and then the next day it's back and it's higher than the next day.
Exactly.
Right?
It's a pinball machine.
I remember talking to a buyer that day and they said, Matt, I'm too nervous about the economy now. I know rates dropped. I'm too nervous about the economy. I was like, I'll call you in 3 days.
Yeah.
when it's literally back in our...
I completely understand.
So what did I do? I went into my account and bought. Right? Okay, I'm going to go buy it today.
If everyone's afraid, I'm going to buy stock today.
Exactly.
Yeah, exactly.
Right? So,
no, that's smart.
I know.
Pretty funny.
All right, Kevin. So we talked about a lot of different programs. To be honest with you, I'm overwhelmed as an agent, right?
Yep.
I'm just like, if I was going to buy a house, I'm just going to defer to my loan officer with a lot of this stuff. I'm not going to sit there and, research analysis by paralysis. But how would you recommend someone going about understanding what they do qualify for?
Call your loan officer and apply for pre-approval.
Okay.
We will double check.
Okay, I'm not ready to apply yet. I don't know when I'm going to buy a house.
Why? What's stopping you right now? Why are you not ready?
Well, it's gonna. I'm gonna take a hit. I'm gonna take a big hit on my credit if you do a hard pull.
Are you the type of person that pulls your credit very often?
No.
What's your credit score? If you had to guess.
Well, Credit Karma.
Oh, Credit Karma.
No.
We talked about that.
We don't. I did learn. Don't trust Credit Karma.
Yep.
And even though your Wells Fargo says you're an 813, I don't trust them. Do an actual poll with a loan officer.
Yep.
I've learned that the hard way so many times, and a lot of times that was for the better. Honestly.
Yeah. Well, you have time to deal with it. You have time to increase the score if you find a
100%.
hiccup.
And I say this is what I tell people, and maybe you tell me if I'm wrong, you agree, but if your credit is high on the better side, you could do a lot of pulls and it really have very little effect on your score.
Bingo. And the people that say to me what you just said are almost always the people with really good scores. And it makes sense because they're monitored. They're like, gosh, I really am careful with my credit, and kudos to you.
Yep.
But you are the person that needs not worry about that.
Yep.
So if you're serious
but okay, I'm going to be totally transparent here. We joke
me.
about this, but this was many years ago. I was like, Kevin, my Credit Karma. One of the reasons I don't trust it, I said, my Credit Karma says I am a 780 score, whatever it was, right? Yeah. You do a hard pull and it's like 660. I'm like, what? Right? It's like, Matt, there's a T-Mobile past due bill for $26. I was like, Kevin, I've never had T-Mobile.
It was there.
But you know what? It took me 60 days
Yep.
of emailing handwritten notes to the credit bureaus to fix it. And I was back up to an 800 score in that period of time.
Yep.
But if I didn't do that pull, I wouldn't have known.
And you still qualified?
I did, but it was worse.
But your interest rate would have been 0.5% higher, and you would have cost yourself money.
Yep.
So to me, it's like, what's the downside really? Yeah, pulling it, but if you're not someone who pulls it a lot, it's not going to ding you much, if at all.
Right.
And then it lasts for 4 months. I mean, the credit report's good for 4 months. I mean, that's a long time.
That's a long time to find. For me to help them find a house.
For you to help find a house, let's get it figured out.
Yep.
By the way, that gives us more time to see, do you fit any of these programs like, Bell's Borrow-Wise, where we can get you $2,500 that is free money, and still do a conventional loan.
So if I pull my credit today, September, October, November, December, January.
You're in 2025.
My pre-approval is good till 2025?
Yes.
January 2025.
With Bell it is.
So there is absolutely no reason, if I'm going to buy this fall, or maybe even early winter, that I should not do this.
If you're serious about it, no, there is no reason.
I mean, that's... Okay, I just learned something there. I did not know it was 4 months.
You didn't know it was 4 months? Yeah.
I didn't know it was 4 months.
Some places I think are 90. But
so that was 4 months.
We're 4 months. The other thing to note with us too, because I get this sometimes, oh, you're going to pull my credit again with a soft credit pull. Or will you pull me with a soft credit pull?
Okay.
No, we don't want to do that. Why? Number one, a soft credit pull up front means we're going to pull again later. We don't do that because we're going to do one credit pull now. If you have an 800 now, I'm going to close your loan in December with that 800 score. Mm-hmm. So if you had a snafu, I'm still using an 800 score. I'm not going to have to repull credit with a soft pull later. We don't do that. So we want to get the score that we want up front, use that to qualify and close.
And if the score is not
the opposite,
right? I've got a past due T-Mobile cell phone bill,
right?
I have time to fix it.
Yes.
So I wasn't in like super high, interest rate score. Not super high, but it would have been, like you said, 0.5% higher
point
over a mistake.
Yeah,
right.
Over something you didn't know about.
Something I didn't even know about.
Right.
So
yeah, give yourself time to think about it.
Give myself time.
Yeah.
Get with you sooner than later.
Yep.
Give you your adequate time to see what programs you may qualify for. And
let's do the final third one. Let's say that you decide not to buy.
Yep.
No problem. We're that much further along for the next time. We'll leave you in the system, and then we'll reactivate you when you come back in spring.
You don't have to get as many docs.
You don't have to get as many docs. Refill out the application.
Oh, that's so true.
Yeah.
Yeah, I can't think of a single reason not to do it then.
Nope.
Well, thanks, Kevin.
No problem.
That's great. A lot of good information here today.
Little forward to singing next time.
Yes.
Bring some new tunes, maybe.
Yeah. Can you pull up like a little Nirvana or who's gonna have the bush?
Backing track for you?
Yes. A backing track of and I'm just gonna see your lip sing and pretend. By the way, we are totally up to date with everything.
Yeah.
Technology and real estate and mortgage.
If it's real estate or mortgage, we know what we're talking about.
Yeah.
If it's music, it's all from the 90s. That's what we got.